Hey everyone, it is Julie here with TipRanks. In today's video, we're taking a look at 3 different infrastructure stocks. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we're talking infrastructure stocks. Of course, last month the US Senate approved a $1 trillion infrastructure package, so there is definitely room for some growth in this sector. We're going to take a look at these companies, what it is that they do, and what analysts are predicting for their stock's future. Just before we get into that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, now let's get right into these 3 infrastructure stocks. First on our list today is Deere & Company. Widely known as John Deere, the Deere Company trades under the ticker DE and is currently priced at $388.53 per share. John Deere is a well-known name in the agricultural world, known for making their farm equipment. They manufacture agricultural, construction, and forestry machinery, diesel engines, drivetrains used in heavy equipment, and lawn care equipment. But they also continue to invest in their Deere technology stack. With more than 180 years of experience and terabytes of precision data, John Deere is working to deliver intelligent, connected machines and applications that will revolutionize production systems in agricultural and construction to unlock customer economic value across the life cycle in ways that are sustainable for all. What was interesting is when Cathie Wood launched their ARK Space ETF, ARKX, the Deere & Company stock was among some of their top holdings. Some people were quite confused as to how John Deere fit in with space, but ARKX still maintains over a $10 million position in the stock. And that is because the ARKX fund was also looking at companies that would benefit from the growth of space. Since the 1990s, John Deere has worked on using GPS technology to improve precision agriculture. In 2018, John Deere partnered with NASA to improve its self-driving tractors. The company tapped into NASA's global network of ground stations. So along with this and other forestry precision technology, John Deere definitely stands to grow as satellites and GPS expands. In August, John Deere announced that they'd be acquiring Bear Flag Robotics. They are an agricultural tech startup based in Silicon Valley that enables a machine to work in a field autonomously. Their technology will complement Deere's own technology initiatives and goals to help farmers achieve the best possible outcomes and solve meaningful challenges through advanced technology, including autonomy. Also in August, the company shared their third quarter earnings report, which came in ahead of analyst expectations. Their net sales jumped 29% year over year to $11.53 billion, topping the street's estimates of $10.3 billion. There also was a rise of 32% in net sales from equipment operations. Meanwhile, their quarterly earnings per share of $5.32 was up 107% from the same period a year ago, also surpassing analyst estimates of $4.57 per share. On top of these impressive results, John Deere also increased their quarterly dividend by 17%. Now sitting at $1.05 per share, the John Deere quarterly dividend has now been raised a total of 38% year to date. The Deere stock does have 5 current analyst ratings, and some of their opinions are a bit mixed. It comes in as a moderate buy based on 3 buy ratings, 1 hold, and 1 sell. The average price target of $407 would be a 4.8% upside potential. On the low end, we do have our sell rating, which would be a downside of nearly 11%, and then we do have a couple buy ratings coming in around the $440 price target, which would be growth of over 13%. The second company we're looking at today is multinational engineering firm AECOM. Their stock trades under the ticker ACM, currently priced at $66.81 per share. AECOM is the world's trusted infrastructure consulting firm, and their projects span from transportation, buildings, water, energy, and the environment, and their public and private sector clients trust them to solve their most complex challenges. AECOM plans to ride the wave of transportation electrification. There is $5 billion proposed in near-term funding for transit agency fleet conversion, with 30% of transit buses being electric by 2030 and 100% by 2040. Of course, California has mandated that all trucks be zero emissions by 2045, and there's an executive order from Biden that 50% of vehicles sold in 2030 are to be zero emissions. AECOM is working to support how their clients reduce their carbon footprint. Their unique capabilities in both transportation and energy infrastructure will help them with transit fleet conversion and modernizing a grid that can support the quick accelerating demand for energy. They have innovative solutions like distributed energy resources that can advance both transportation and energy infrastructure. AECOM shared their third quarter results earlier in August. Their adjusted earnings per share at 73 cents met analyst expectations and grew 33% year over year. Their revenues of $3.4 million beat the consensus estimates and grew 7% year over year. They also raised their fiscal 2021 guidance. For their adjusted earnings per share, they're now expecting 30% year-over-year growth, and for their adjusted EBITDA, 10% year-over-year growth. Now, the AECOM stock does just have 3 current analyst ratings, but all 3 of them do come in with a buy. And their price targets are fairly close together, ranging from $78 to $81. The average $79.33 would be an upside potential of over 18%. And the third company on our list today is railroad company Union Pacific. Their stock trades under the ticker UNP, currently priced at $215.40 per share. Union Pacific is one of America's leading transportation companies. Its principal operating company, Union Pacific Railroad, is North America's premier railroad franchise, covering 23 states across the western two-thirds of the U.S. They have over 32,000 route miles across those 23 states with 7 border crossings. They come in with 7.8 million annual carloads and currently employ about 31,000 employees. Union Pacific also pays a dividend and currently has a dividend yield of about 1.9%. That dividend has increased about 56% annually from 2018 to 2020. They've seen $25.2 billion in cash returned to shareholders and $114 million in shares repurchased. Moving forward from 2022 to 2024, they're expecting share repurchases of $18 to $19 billion. Their second quarter earnings report came out near the end of July. Their earnings per share of $2.72 did surpass analyst expectations and grew 63% on a year-over-year basis. Their operating revenues of $5.5 million also beat analyst expectations, and their top line inched up over 29% year-over-year. Moving forward, they're expecting their full-year volume to have growth of 7% and a 200 basis points of operating ratio improvement. The Union Pacific stock has 17 analyst ratings and comes in as a strong buy based on 13 buy ratings, 4 holds, and no sells. The average price target comes in at $248, which would be a 15% upside for this next year. We do have a couple outliers, with our lowest being a hold rating for an almost 5% downside, and on the high end a $270 price target, which would be growth of 25%. The rest fall in the range of 15 to 20% upside. So there are 3 infrastructure stocks to take a closer look at. And of course, I always love hearing from you guys, so make sure to let me know your thoughts on these 3 companies in the comments down below, or what other infrastructure stocks are catching your eye lately. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.